Putin wants a truce for 3 days so we can have parades on Red Square. What else is happening? Anybody can chime in.
Not really anything good.
Oh, there's more bad stuff in the world.
Oh,
What check? Come, it's our meetup.
Oh, yeah. Right. Good. It's 6. Oh,
What check is from Warsaw is here with us.
hello.
I was asking what's happening in the world because you at least you didn't have to host the conference. You could at least read the news. What's happening in the world today?
No, I was listening.
Oh, he was being very present. So that's good. That's good. Anyone? I mean,
Now, to be honest, it was really interesting. I mean, almost all presentations were cool. Just you get a little bit of your energy at the very end. Just,
yeah, 2 days
Just
long, but a lot of learning for me.
yeah. For
So
me too.
how is the region interested in investing, for example? What type of deals do they look at?
How is the region interested in what?
In investing, or given the turbulence, did they shift their views?
I must say I didn't hear a lot of that, but in some private conversations there was with oil being where it's at, and some unknowns that some things were the sort of maybe not as there's some slowing down of decisions, but not in the official conference, and even like no one like the directions. It's maybe a little bit off the pace. That was my takeaway.
Yeah. I think the project in the north west is probably a little bit slower than they expected it to be. Some things did not work out, but overall, I think the direction is continuing.
Yeah. So what's happening in your worlds? I need to catch up on the rest of the world here now. You guys are all silent on me.
But in our world, I mean, it's like, after the initial tariff shock, I think there's just gonna be further negotiations. I think this Switzerland has some exceptions with pharma and a couple of other industries, but things kind of calmed down on that front from the initial shock. I mean, but still, much remains to be seen. After the pause and all that.
Right.
Yeah, I mean, I don't think there's.
Yeah, I think there's someone was saying last night, and I thought that the American brand has been damaged, but they said that how much one person can move the markets, even when he moves it back, says, I'm going to take a pause. It was interesting. They took that as a sign of respect. I took it as a sign of not, can we be trusted? But in any event.
That's interesting you say that. I mean, I didn't want to say, but one of my American friends, he corresponded with a UK pension manager, and he got the response that they were more now focusing on Europe than US because it's very turbulent. And I was pretty much shocked, as was my friend, because I mean, when you say Western investments, or maybe I have also a slight bias, but I would think of US and Europe and Canada like this. I don't know if the person said it to my contact because he didn't want to invest in a particular project and that was an excuse. I don't know, but he was pretty open about it. So okay, I don't know. That's why I was kind of trying to ask, did their perspective change? Because I know the emerging markets, they want to, since they have in volatile environment and currencies, they like to invest in stable environments. Part of
Julio, come say hi. This is a key person at our conference.
Hello.
Hello.
Hi. How do you say your name? Zerin?
Zerin, nice to meet you.
Nice to meet you.
Geneva, although you never know where she is, given
I am
the
in Zurich currently.
She's
I
in
am
the
based in
cosmos, orbiting a bit outside of Earth.
yeah. Sometimes she's in Istanbul.
Yes.
This time she's in Zurich.
Nice to
Yes.
meet you,
Nice to
Giulio.
meet you.
Julia's from Rome, but he lives in Dubai.
Oh, good, good. Maybe I'll visit Dubai this year.
Yeah,
So,
Well,
yeah.
well, you've never.
Dubai.
She's been to probably 150, maybe more Zooms, and we've never
Yes.
seen her in person.
No.
No, we did once in Zurich.
Here's Kelvin's here. Kelvin.
Oh, it's
Yeah.
oh, this is very timely
Yes.
because I brought you a little delayed birthday gift.
Oh wow.
This Chinese pu'er tea.
Wow.
Chinese what?
Pu'er tea.
Pure tea.
Yeah. So
See this?
good for you. It's from Yunnan
Very
province.
nice.
Yunnan
And
province is
it's in the right
uh,
color.
the health region of China.
Yeah. Well, let me that back.
Oh, I didn't realize I was going to be on a 361.
You are. That's the way it is. So I could keep it in its wrapping, just keep it fresh until I have it.
Sure.
I take it
yes.
home. All
Yeah.
right.
I'll send you some
Thank you.
instructions. Yeah, you're welcome.
Belated birthday gift. I said it was birthday month, but you're the only one who took it serious.
I didn't have time to get you ping pong.
Yes. Hi, Erica Lil. And someone else joined. Jane,
Today.
we're good. We're here. Just finished up Riyadh.
Another important question, is pickleball picking up in Middle East as much as it does in US?
I have not. People like paddle. We talk about paddle here, but not pickleball. There's definitely a problem with physical activity, diabetes, diet in general in the region. And they should be playing pickleball or anything,
Yeah.
but
A-
I didn't
and
really
the
hear of it.
Water quality, I mean, from the UAE, I also heard that there were some minerals and deficiencies that was also causing health issues like weather and water quality.
Yep. I'd say we talked about the food systems. Water wasn't as much. AI was definitely a theme.
Mm.
AI for good, but some existential questions again because Dukai was with us.
There was climate impact, but not that much. No climate tech really.
The guy I
There's-
really want to bring in to do the wrap up is Ari. You guys hold court for a little bit. Who's iPhone? Hi, Burrell. Hi, Blue. I'll be right back. I'm gonna find Ari.
So guys, we're sitting in 40 degrees right now.
It looks spectacular, and I had reservations at that hotel. I'm really sad I missed it this year.
Nice
Yeah.
place.
Yeah, it's really nice.
Sorry, it's very early here, and I'm getting ready for a meeting, so camera off for now. Nice meeting you guys. So where are you from, and what are you doing there?
I mean, I live in Hong Kong, but I'm from London originally. So I work with a bunch of different family offices where I guess is now global trade is probably the best way to describe it. So some stuff is payments, other stuff is commodities, energy, real estate. We also transfer companies into this jurisdiction, kind of rehome them from the Middle East. Yeah, I'm interested in AI, robotics, healthcare. Yeah.
Fantastic, thank you. And you?
I'm Wojtek Tomikowski. I sometimes participate in those. Steven is there, so listening to Steven. I'm an AI entrepreneur. We have a company in the US and also the daughter company in Poland with the local engineers there, and currently trying to explore the possibility of doing operations in Middle East. That's why I'm here. And I don't know if you go, but I go to Dubai, to Abu Dhabi next after this tomorrow, and then to Dubai to see. It's interesting to watch because it sounds like Saudi are doing a bit of competition to Emirates. Emirates been the only place or the biggest place for international conversations, interchange and trade and investment for the region. And right now it looks like Saudi is trying to get this place, trying to base Riyadh in the center of this conversation. And they have the advantage of economy for sure. There's 35 million people versus very, much smaller societies of Emirates. But they still have some way to
What-
go.
All right, I've got,
Couldn't agree more.
so the perfect person to give the wrap up is here. All right, all right, give him a chair.
Yeah,
Oh, no.
yeah, sit here and then.
He's the man of the hour.
Hello, everyone. Hello, community. First of all, thank you to Mark and the 361 firm for really putting on such an incredible opportunity to listen and to hear about investment in the region, to talk about purpose-led, purpose-driven investment. So I wanted to kind of just share with the community a little bit of a recap of everything that we have done over the last 2 days. So bear with me for a few minutes. I'll probably keep it to 2. I'm going to read a little bit about what that recap was and share with all of you. So the event brought together leading innovators, investors, entrepreneurs, thought leaders across sectors like fintech, agritech, sustainable technologies, AI, real estate innovation, healthcare, and climate solutions. There were many more. We had an entire breakout day for women empowerment on travel and hospitality to space and engineering. It was incredible. Many of these thought leaders were driving major changes here in the Gulf and beyond the Middle East. So, across nearly 30 sessions, we explored the rise of purpose-driven companies, agritech, and desert technology, future of sustainable industries like prop chem, turning tire waste, prochem, excuse me, prochem, turning tire waste into circular economic opportunities. Probably my favorite company that presented, by the way. It's funny. It's always the unsexy ones that to me are the most exciting and the most sexy. And of course, new models for mental health, healthcare investment here in the region. And of course, visionary discussions around AI. I mean, AI is just a topic that every conference has to touch upon. But what we did here, my friends, is that we took really good leaders, great leaders who are thinking about AI, not just in respect to their sectors, but how they're implementing it here in the kingdom, in Saudi Arabia. And that gave it an even bigger, more powerful purpose because it was really localized. And of course, cutting edge fintech technologies with one that we just heard, the last one was about buy now, pay later. And that concept here in America, right, it has been around for a while, but it's slowly coming to play into fruition here in Saudi. And when you have such a young population, right, 70% of the population is under the age of 40, I think. They're all looking to that tech solution, buy now, pay later. It's becoming a massive, massive boon.
10-second pause. I just want to, my takeaway, things like that, there are opportunities for us to be investing and grow companies here. That was one of my big takeaways.
Yeah,
I didn't expect to come away with it so viscerally, but I see it.
I've been in the region 10 years. I've been investing in the region for 10 years. I've built purpose-led companies in the region, starting in Saudi, moving to Bahrain, to Kuwait, Qatar, the UAE, Egypt. And I can tell you that a lot of the solutions that we take for granted in the United States are actually undiscovered here. There is so much opportunity to take the things that we do on an everyday basis in America, in the States, and just bringing them here is a massive game changer. So Mark, I want to leave the community with one more thing.
Sure.
And whatever industry you are in, whatever service that you provide, whatever business that you're investing in or you're growing, take a beat, take a pause, think about how you can expand it here in a region that is so thirsty for innovation. Because a lot of what we're doing and a lot of the things we're doing by rote is innovative here. So Mark, thank you. And to the entire team that joined him, it was really so informative. And we hope to see more of you, people in our community, coming back to the Saudi, coming back to the region, even for your first time, if you're visiting or you're returning. We'd love to share it with you. So thank you all so much. That is my update. Wishing you all a wonderful, wonderful day.
Too much.
Thank you so much. Thank you, guys.
Thank you.
Well, first of all, both of you. So we mentioned ProChem. Carl was a big hit, talking about there are 22 million tires that the Saudis discard every year. And I saw the crowd was like on its feet, taking pictures of every slide you had.
It was just amazing. And the interest locally here, it really is a marketplace that's just ripe for investment, looking for technologies. They really want to grow and bring things into the country. So it's very ripe. It's amazing. It was well worth the money.
Now you're in the country, sort of. I mean, you're in Dubai. And by the way, if anyone's in Dubai on Thursday, the 1st, St. Regis downtown, we host 360 roundtables. Did you learn anything these last 2 days? Maybe just announce yourself. Some people know.
Hello, my name is Zach. I guess a key thing that was shared with me or reiterated was whenever you're talking with a partner here, they want to see like a real business because they see their money as real hard-earned money. So they want something that's going to be, revenue generating immediately, more on the traditional type of business model. They don't want something that's going to be losing money for years or whatnot and then making money. And this came from like a royal family offices member, like in these 2 days that I met with. So that's like a big thing.
Well, who wants to lose money? Right? Nobody. That's pretty universal, but yeah, all the more.
I mean,
we made a relationship with the like the premier association of family offices, and I guess the one of the takeaways, the Ministry of Investments basically apologized that they didn't support this. They came and they were wowed. I think that was the same thing for that association. So I think we're coming back sooner, probably November.
yeah, FII would be good.
Yeah, and I think that would be welcome. So if you didn't make it this time, we'll have another go at it. Edie, do you want to say it? Because you know much more than I do of the region. Yeah, if you don't mind.
You get the hot seat that I took.
So Edie was a member of the board of directors of the Saudi Travel Authority. So I got Tourism Authority.
Hi, everybody. I hope everybody's well. Greetings from Riyadh. So I started my journey coming here about 8 years ago when I started and was recruited by the Public Investment Fund to be special advisor on a project, because that was their MO back then. They would evaluate a project, go, no go, and all under NDAs, and then decide if it's a company they want to start or invest in, which they subsequently did. And then from that role, I was put on the board of the Saudi Tourism Authority because my background is cruise industry CEO and chairwoman. And I was on that board from its inception and chaired the nominating and remuneration committee. So I'm very bullish on everything they are doing here. I mean, I know Ari alluded to it, but just to give you a concept, Vision 2030, and you can read about that online, is a multi-trillion-dollar investment in the future of this country and kingdom which was closed off up until 8 years ago from tourism. And last year they hosted over 103 million tourists, and this year they'll do 150 million. But they have 13 key pillars in different variations: sports, culture, fintech, and the list goes on. And a population of just under 35 million people, 70% of whom are actually 30 years or younger. I know Ari said they're actually 30 years or younger. So they're investing in their people, from education and just the whole infrastructure. It's just an amazing place. And I often say, and I was just recently quoted in a Forbes article on Ghaya, where we sit, which is a UNESCO World Heritage Site. And this is the first hotel that they've opened here, that it will become the new global standard for tourism and the new benchmark for a Harvard business case study. What they have upcoming as well, Vision 2030. In 2030, they are going to host the World Expo. And in 2034, they are going to host the World Cup, for which they're building 12 stadiums throughout the country. So it's on fire. I'm very bullish on investing here. They have great infrastructure. If you have a business plan, as an example on the tourism side, if you write a business plan and you have a reputable feasibility study from the McKinseys of the world or whomever, the Tourism Development Fund will fund 75% of that. But ideally, of course, what they would like is FDI. So if you're interested in investing here, you should really look at it, because the world is their oyster and it's just going to keep going up, up, up. And it's really an amazing place. Any questions, comments? And Mark's conference was wonderful. So what I was doing here, I'm friends with one of the princesses, and I actually, as part of like the cohort for women, I interviewed the two princesses, and they do everything here around sustainability and purpose. They really are great role models. So that was what Mark invited me to come and do that, and I was happy to do so. So that's what I was doing here.
It was awesome.
Questions, comments?
You sound like me. I always say questions, comments, thoughts.
And the other thing for the women on this, I always get asked, oh, you go there all alone as an American blonde female? And I say, you don't understand. You don't know what you don't know. I'm safer coming here than my hometown of New York. It's just an amazing place. Like, I'm sitting outdoors at a restaurant here at the hotel with these guys, and I just left my purse with my passport, money, my
I think you
phone.
could put it in the middle of the
You
street.
can put it in the middle of anywhere. Nobody will ever touch it. You can walk to your hotel room alone at night and feel completely safe. It's so safe here, and it's really an interesting, amazing place to
So-
visit as a tourist and for FDI and or business.
So we're drinking a little Kool-Aid, as you can tell. But
it's real. They're coming off 2-day high of a conference.
Yeah.
I've been coming here for 8 years, and I can tell you it's real.
any questions, comments, guys?
Maybe just a quick comment. You had mentioned last year that they wanted to increase their expat population. So in UAE, apparently you can get away with English. You don't necessarily have to know Arabic, to work and live. Would you say the similar thing for Saudi, or would you need to know the local language?
It's an excellent question, something I take for granted, because in 8 years of coming here, I learned one Arabic word, shukran, which is thank you. They speak better English than I do. They're educated all over the world, and they speak English as just as swiftly as they speak Arabic. But as an investor, as an expat, as anything, you just need to speak English.
Okay.
Can we get the former ambassador to say a word? Can you just say hi?
Thank you,
This is
guys.
our community. We're just doing our debrief of what we learned. So have a seat. The former ambassador to UAE, Mike Corbin, during the Obama years, said, what were your takeaways and reflections?
I love the conference because it was different than other conferences because of the combination of people and ideas really coming together rather than just a networking event or rather than just a salesperson's event. It was really about deep thinking in critical areas right now, like AI and where the financial world is going. And so I enjoyed it immensely, and I really, really appreciated coming and joining.
And you're joining us in Dubai?
I will, yes, I'll try. And I'm based in Dubai, which is the new, the UAE, I would argue, is the new capital of the global South, and it's going to be, it's going to boom. So nice to participate. Thanks for putting me on.
Hey, do you want to say a word?
Okay. And one other thing while we're waiting for her to speak, I'm happen to be in a dress today that I have a headpiece on, but it's totally unnecessary. I always like them to feel like I'm respecting their culture. But you can wear Western clothes and you don't need an abaya, you don't need a headpiece for women especially, and men can just wear whatever type of dress they like.
The sense of pride of in Saudi of the young generation is incredible. It's a place that must be in the list of key places to visit because it's beautiful in nature and beautiful in culture, and they honor their tradition in an incredible way. So I live in Dubai. I'm the wife of the ambassador, but also a marketing and communication specialist and advisor, and I help with the PR of the conference. The quantity of valuable information and I've been listening to in this conference. It was incredible. So powerful, meaningful, deep, large. So now it's how to distill the one that will keep resonating. But you truly have planted a seed, and this country is very receptive for what we have seen. The changes have happened in the past 10 years.
And a lot of women,
Yeah.
three have gone abroad, London, US, and come back to a different country. It's also interesting.
And they're contributing to changing the pace and bringing ideas to life in a everything happens here in a very short span compared to anywhere. I'm Italian, so compared to Europe, everything happened in a very short span. So it's fast paced, and for young generation, the population is all under 30. So incredible, really beautiful to be here. I live in Dubai, but I came to Saudi often and I love it. So thanks for having me.
Please. So any questions, comments before we talk about the long-term implications of trade tariffs? The trade tariff war, I should say.
Sorry, I don't know how to raise a hand.
Go for it.
I just attended a big conference in Singapore, and Dubai is obviously actively promoting itself as a epicenter for business. A business epicenter. Yeah. I just want to understand what is Saudi's objective in relation to Dubai. Is that going to be a competition for Dubai, or like what is the?
It's too bad the ambassador left, but you can give your UAE or Saudi perspective.
I'll give you my opinion and what I've seen, which has been transformational these last 8 years. And the first time I ever went to Dubai was in 2001. So I think they're friendly GCC region countries, but like everybody, you want to be competitive. You want your brand to be the best brand. So I think one of the things Saudi tried a couple of years ago was to say to all of the people interested in doing business here, you must make this your GCC headquarters. It was very difficult for them to do that because so many people were entrenched already in Dubai for a quarter of a century with their GCC. So they had HQ. So they pulled back on that and loosened back on that a little bit. Obviously, the more you're endeavoring to show them good face, open an office here, partner with a local family or entity, they're going to like it. But Dubai, I think, in order to compete, so if you go to Dubai, you can drink alcohol, and now they're even getting gambling with the Wynn Resort, and rumor has it to open up 5 other integrated gaming
And they might go
resorts.
to a Saturday, Sunday.
And they have already gone to Saturday, Sunday weekend to acquiesce to the rest of the world. What happens though then is the UAE people work 7 days a week because it just doesn't really work yet.
Yeah.
But here in Saudi, the weekend is Friday and Saturday. There is no alcohol allowed unless you go to an embassy function, and then you can have alcohol, and there's no gambling. So I would say they're all competing for tourism dollars, but in a friendly way. I hope
Right.
I've answered your question.
Yeah, so well done. Any last question or comment? If not, good to see you, Jane, by the way. We do want to talk about Berkeley tomorrow at 12, if you're able to make it 12 p.m. Eastern.
Okay, all right, sounds good. I was actually playing piano while listening to you talk.
Well, that's good. We'll have to make that an event at some point. All right.
Yeah.
Well, Stephen, your 264th briefing. Thank you again for your service.
Thank you. Let's see if this-
And again, if anybody will be or knows someone in Dubai Thursday, 2 to 5 p.m., St. Regis downtown, we host roundtables.
Mark, is this coming up in a single screen?
It's a double,
Okay.
which by
Thank
the
you.
way, frustrated Ghaya yesterday,
Um,
somewhere around here.
How about now?
Looks like you're almost, now we have a blank screen where I am.
God. Hold on one sec.
Is this your first Zoom, Stephen?
I don't know what to tell you. It might be a geographical issue.
Oh, ask someone else then. Could be us.
How about now?
Yes.
Okay. All right, that wasn't so hard. All right, let's see if I can get this going. The global economic system, which most countries have operated under for the last 80 years, is undergoing a reset, and it's ushering in a new era. The existing rules are being challenged mainly by the policies of President Trump, while other new ones have yet to emerge. And we're going to be feeling this for some time. But today I want to talk briefly about the president's first 100 days, share some survey results from the Bloomberg economist survey, and then discuss the longer term impacts. So we'll jump right into it. So the president was running for office. This was his platform. These 20 points were on the RNC, the Republican National Committee's website. They're on the White House website. And one of the things that we have to understand with President Trump is he will try and do what he says he's going to. What he says he's going to do, he's going to try and do. He is unlike most politicians in that the campaign promises are the stuff he actually is going to try and deliver on. And I think when you strip out the personality, if you get to the core ideas of what the president ran on, it was really ending wars, securing the border, and fair trade, which are actually hard to argue for any politician are not good things. I think the challenge he had was the tariffs are, on the other hand, are not popular. They have not been well understood, and I don't think they've been well communicated, and therefore people are really frustrated by it. But this is really important to understand that these are his priorities. These are the things that he set out to do. He's told the world he's going to do this. He told the US he was going to do it, but other countries. And this is really where his focus is. So very important to understand these 20 because he said it and he's trying to knock them all off. Right or wrong, this is what he's doing. I think the first 100 days have been very unusual. They're not your typical first 100 days. I think the next 100 days are going to be challenged in different ways. But if you look at this, just the scale of the executive orders that were signed, 4 times what he did in his first presidency, 3 times the Biden administration's figures. important to keep in mind, executive orders can be flipped by the next executive. So you need to get these set up and then get them into law, which is the next phase. And I think this is where he's going to run into two challenges in the next 100 days. I think the president's going to have challenges with Congress, as many of them are trying to figure out as they talk to voters at home, if you're up for re-election in 18 months, how positive are you on the way the tariffs are working out? So he's got Congress that he's got to deal with, and they have a big agenda for tax cuts and things like that. But if jobless rates might rise due to the tariffs, that becomes more of a challenge with your congressional members. So he's got a challenge there, but he also is going to be facing a court challenge on a number of his policies, and how that plays out is going to be very important to see what's coming over the next 100 days. So I think he had an easier first 100 days than his next 100 days will be. And I think that's going to be a challenge because the president is not known for his patience. And we'll touch on that a little bit later. Second thing you want to keep in mind, excuse me, is he is very market aware, even though he says he isn't. But this is a look at the S&P change for his first 100 days this go around versus the last 7 administrations. And you can see this is not the sign he was looking for, but it shouldn't be a surprise either because we're coming off 20% years. So a pullback of some sort was expected. I think the degree of it and that some of it was self-inflicted was less expected, but the spillover has gone beyond stocks. And that's something that is a bit of a challenge. It's impacted both bond yields, crude, as well as the dollar. The Treasury yields are going the wrong way for him. The dollar is where he wants it to be, and crude prices he would like to see continuing to come down. What's interesting is these are mixed dynamics for the president in that he keeps pushing for the Fed to lower rates, but the Fed can't really lower the 10-year very much. And the impact of a lower dollar, while positive in some regards, is not necessarily as positive over the long term as he might think. Clearly, lower oil prices are good for the US, but they're crippling for Russia right now. And this is an area that may help push discussions to a resolution there, but I don't expect it's going to happen as fast as the president would like. Tariffs have been a challenge for everyone, but from a perception perspective, they're not being very well received by the public in the US. This is a survey from Gallup that was done in the last 2 weeks, from April 2nd to the 15th. And they asked, in the short run, do you think this is more of a positive with money coming into the US with other countries paying, or will we be paying more to other countries? And in both cases, short term, 70% think it'll cost the US more than we bring in from other countries. And in the long run, 62%. And this is not the mix that the government's looking for. And this creates a bit of a challenge for Scott Bessent and others in the administration to deliver on the policies of the administration. So let's switch gears to what the Bloomberg Economist survey is thinking about what's coming. And clearly it's starting with recession odds are on the rise. They've moved up to 45% from the aggregate of the survey, up from 25 in December and 30 in March. So not a great sign there. In addition, you have US growth slowing. So you have recession odds up, growth going the wrong way. And you're saying we're down from 2% in March to where we're looking at 1.4% in April. And for 26, the odds have come down to 1.5% from 1.9. So definitely growth not going the right way either. Making it a bigger challenge for the Fed when you have slowing growth, but inflation expectations up. It's hard to comply with what the president would like in terms of lowering rates when in the 70s we had it going the other way. But you can see here that Core PCE is moving up to 3.2% from 2.7 in March. It's projected to finish the year around 3.3. So definitely not going the right way on inflation. And then jobless rates are projected to move up as well. All these things, jobless rates moving up, were anticipated. We had a very strong run and we had a feeling that unemployment was going to rise. But when it's rising against the kind of backdrop with tariffs and trade and deportations and things like that, it creates some different challenges. And you saw the JOLTS numbers today were 300,000 less than they were in the previous month at 6.1 million. So that's the job openings are down as well. So you are seeing some squishiness in the markets there as well. So not a great setup from the types of things you'd like to see from an economist's perspective of slower growth, rising recession odds, higher inflation, and higher unemployment is not the mix that you would say everything's great for. So let's switch gears and say, what does this mean for the world going forward? I think there are 5 areas that are going to be greatly impacted by this, starting with geopolitics, which everything's been changing here since really since the great financial crisis. We've started to see the change, but you've just had a layering of things coming on top of it. So you had the great financial crisis, followed by the challenges in Europe with Brexit and Grexit and the like. You moved to the pandemic, which was a major disruption to the war in Ukraine, to what happened October 7th, 2 years ago, to now the Trump administration, the tariff war. So all these things are hitting. And during this time, for most of the 80 years that we described at the start, the US was seen as the pillar of stability of the post-World War II period. We're now being viewed as a destabilizing force. The reason we were viewed as a pillar of stability was based on a trust that was built up due to our commitment to the rule of law, to our commitment to free markets, and to the multilateral governing institutions that were established. We're now moving away from the multilateral governing institutions. The tariffs are going against the free market approach, and some of the actions against on deportations and going against the courts in some cases are questioning the rule of law. And now you have China's rise combined with Trump's unconditional policies, and it's really forcing other nations to figure out, where do I fit in the new world order, and how do I play against the 2 biggest economies or with the 2 biggest economies? And you saw China out today saying it's going to hurt, they're going to hurt countries that go along with the anti-China rhetoric of the US, and it's going to force major decisions for government leaders, which moves us to the second area of changes, which is domestic politics. So now you have geopolitics changing and domestic politics are getting much more difficult as the pendulum swings from the left to the right, to the left to the right, back and forth, keep continuing. And these are coming at a time that the public demands far outstrip the coffers of governments to deliver on the demands of the public. And you're seeing growth challenges, inflation challenges, job challenges, immigration challenges, innovation challenges, all occurring at the same time. Governments are dealing with old economy versus new economy issues and national security issues, which are tapping the system pretty extensively. And adding to the complications for this are major shifts in the mentality of the US from stimulus to austerity, while Germany is going from austerity to stimulus, and China is working to manage to stability with stimulating just enough when they need to, doing austerity when they need to, and just trying to get by and maintain stability inside the country. So you have these policies all working against each other. And you saw today that President Trump won another election. It was the Canadian election that he won for the Liberals, who were woeful underdogs for most of the time until the tariffs hit. And the newly elected Premier Carney has turned it around and won it for the Liberals with a slim majority, but it was one that they weren't even close to winning a couple months ago. And that turned around mainly on the anti-US policies of Fight the US that Carney put out. So something to keep in mind, domestic politics is impacting global politics and vice versa, and it is bleeding into fiscal policy. I just touched on governments being tapped out, with the exception of a few nations like Germany. The shift from the US doing austerity and Germany doing stimulus is fascinating, but it's coming at a time that, that you're going to see policy being impacted by currency moves and other moves. So we're going to really have to see how this plays out. But there is very limited space to do the things that governments need to do, which puts more pressure on monetary policy. And in the US, monetary policy is in a particularly tough spot with the Chair Powell for three reasons. First, Fed independence is being called into question yet again by the president. Second, it's hard to affect policy, monetary policy, when you don't know what the rules of the road are for trade, which impact economic policy, which impact jobs and inflation, which are the two mandates that the Fed has of price stability and full employment. So it puts them in a very difficult spot. And the dual mandate is going to be further challenged by slowing growth, higher inflation, rising unemployment. And you're seeing this at a time that currencies are moving in we're seeing some big distortions, and you're seeing central banks moving away from each other in terms of what their policy mandates are. When you have big problems, they tend to work in unison. The problems of each nation and the politics of each nation are pushing them away. And unless you get a major global crisis, you will have monetary policy and fiscal policy at odds with other countries, and that's going to set up some bigger challenges. And then lastly, you have behavioral challenges that are coming in, both government, corporate, consumer, and investor. So I'll touch on them quickly. From the government perspective, you're seeing in the US, the Fed is pulling in spending, pushing more to the states. And at a time the states are dealing with that and the private sector, and they're getting hit with higher costs and higher spending needs. So it's much more difficult for them to absorb what the federal government's putting through, which should lead to lower growth. Corporations are dealing with unclear input costs, and they're uncertain about the ability of consumers to absorb price. They're also unclear about what the rules of the road are going to be as we have this policies coming on, coming off. We're going to sectorial tariffs coming. We don't know what's going to happen on July 9th when the 90-day stay runs out. So it's very hard for them to make long-term investment decisions, which means most of them are going to punt on those decisions, slowing spending and slowing growth. And then you have consumers who are also dealing with pulling in their spending in anticipation of slower growth or job losses. And there also has been pull forward of demand in anticipation of higher costs with tariffs and shortages on shelves, which is going to create distortions on company earnings and their ability to report on earnings. And as we're seeing for investors now, as we're going into earnings season, companies are giving guidance. They're giving guidance in very mixed ways, where some are saying, well, this is the guidance, but we can't really say because we don't know what the actual tariff policy will be, or they're pulling in guidance or withholding guidance. So it's become much more difficult. So in this level, what you're going to see is you're really looking at a world where we have a hot war going on, a cold war going on, a trade war going on, a tech war going on. And when you add them up, they equal lower growth, higher inflation, and greater uncertainty, which in that period, you want to invest in the areas of higher needs. And for us, you want to look around and say, we saw Spain and Portugal have a major blackout yesterday. So infrastructure is going to be one of the themes that's going to continue to attract investments. We also know that innovation is going to continue to do that. You're going to require critical materials. So the fight for critical resources is going to continue. And you're going to see the need for companies and countries to continue to improve productivity. And that's very difficult to do when you have the challenges that we're facing. But spending on productivity has to continue. You're going to see more money going into tech. continuing to go into tech. It may not go into the same companies it was going into, but spend will continue to go in there because we need to lower costs to offset the higher input costs that we're going to see from trade and inflationary pressures. Healthcare is another area we want to see money continue to go into. We're living longer. We have different demographic issues that we're facing. It's going to put greater pressure on the workforce to continue to work higher at higher levels. It's also going to require more substitution of capital for labor as we're seeing the demographics come in. And I'd say the last area of need that you want to look at is focusing on high quality companies with strong and rising dividends is going to be the other area you want to go into, Mark. So I'm going to stop there. There's a lot to cover and we'll be seeing a lot of things moving over the next couple months as well. So open it up for discussion.
Thanks, Stephen. So questions, comments? Questions, comments?
Hello, everybody, and thank you so much for the presentation. I love this. This was fantastic. My name is Tamara Zampini. I am a Latin American-born Canadian, most of my life living between Europe and Canada. I was a part of the blackout yesterday here in Portugal, and I am, in a way, sitting there tweaking my fingers going, you know, it's funny how people get excited about all kinds of AI and all great things happening. But at the same time, we need to figure out how are we dealing with infrastructure and actual critical infrastructure that sustains life, including oil and gas, which obviously is petrochemicals, other renewable resources such as solar, for example, which the Iberian Peninsula has very, very, very much a lot of sunshine, and yet we have failed to deploy technologies which could have kept us all on all day long yesterday without any issues. So the funny thing is, let's stop talking and let's start doing and implementing innovation and technology that is available today, wherever it is. So my theory is, where God gives you lemons, we make lemonade. We don't make wine or coffee, even though I like both of them, or all three, as a matter of fact. But how do we maximize our resources responsibly, better and better, everywhere that we are? And so my question is, what do we think about decentralized access to power and energy? Because if we were in the middle of winter in a northern European country, or Canada for that matter, we would have had a lot of deaths here. Yesterday we were lucky, of course, we were very warm. So how do we manage decentralized energy and power distribution across both Europe and the Americas, for example, just as a case in point? Thank you.
Well, Damaris,
Wanda,
thanks. You're on a great.
I have an answer. It's Anthony. I've been talking about Rheinmetall and Siemens Energy for, long time. Siemens Energy is, I think, at a new high today, approaching €70, 69.72. They're intrinsically engaged in what happened yesterday in Portugal and Spain. And the reason they collapsed in October 2023 from 50 billion to 5 billion market cap, down from what, €50 to €8, was specifically for that reason, because of their investment in the Spanish wind turbines, which is all now since recovered. And I think they're going to take care of the problem that you just asked.
Yeah, I would actually say we have a bigger issue than that. I think we have an issue that
I think that's temporary. That's a Band-Aid.
Yeah, McKinsey highlighted this problem years ago, that they felt we had a $77 trillion shortfall on infrastructure spending globally. And we keep putting off critical spending as if it's postponable when it's not. And we're sending the bill to the kids' table, and we got to stop. You can't make long-term investments in the short term. You have to have a plan, and we're not spending for the long term. And so you have to get ahead of this, and we're not. So there's no quick fixes to a hard problem. You have to allocate investment budgets by the governments and treat it as if you are a company, and measure it to return on investment, not the typical government will spend and don't worry about whether it's a return or not. I think that's the only way you do it, Damaris.
So Wanda's got a question. Then Michael.
Thank you, Stephen. I have a clarifying question, or I ask you to clarify if I heard you correctly. So the dollar is weakened, which is not necessarily bad for American business. And you said that at the same time, it hurts Russian ruble. And did I hear
Oil being down hurts Russian.
Right.
Russian.
Did I hear you correctly that you said that that may prompt Trump to act on a weakened dollar? Or am I making it up?
No, not the dollar. I was saying that the lower oil prices are definitely crippling Russia's budget right now. And they were up 5% in GDP last year. The war machine isn't producing the results it produced. It's unsustainable to run a war economy for as long as they have, particularly when they're getting hit with lower oil prices, which are the big funder for it. Adam Blanco, if he's on, could add to that discussion, but that's what I was hitting. Russia's economy was being very much carried by oil in the war, and now the oil is not there to support the war spend.
Thank you.
So that's what I was referencing.
Michael Daly, you have a question?
Yes, I do have a question. Stephen, going back to your slide on the 20 points, you indicated some of those are not controversial. Every politician would support them. I just wondered if you could do a quick drill down on that list and see where the intentions are not being actualized, particularly point 20, but I think 6 and 12, and a number of them are pretty shallow.
The only three that I said are hard to argue against, Michael, were ending wars. I don't know who's against that, except the guys starting them. The second one was securing the border, which most countries do, and having fair trade. On his list that you can get, I'll try and pull up if I can get to it again. Michael, I think what I was saying about this list is understand this list because he's going to try and do what's on here. That's the first thing. This isn't my statement that I agree with any of these or not agree or disagree. All I said was the three that are the core to it. It's very hard to argue with any of those three are not things that everyone could get behind. A lot of these people can't get behind.
Well,
so
I was just wondering particularly perhaps about 20, 14, and number 6. I don't know.
Let's on that number 6, he is trying for the tax cut for workers and tax cuts for tips. I think that's going to be a challenge. I think Congress is going to have a hard time getting to a budget at the end of this year for this year and do all the things that they want to do on it. I think with most of these, what I would say is understand what's on here because he's going to try and do it, whether you agree or disagree. That's why I showed this for you, not to make a statement.
I don't see any action on number 20 whatsoever, not a bit.
Okay.
But thank you.
You're welcome. Yeah, my job is to frame out what's happening, not to pick a side in this, because as investors, if you're picking sides, you're going to be making a decision that is biased by the wrong things.
Interesting comment in the chat from Timothy.
I'm sorry?
There's an interesting comment in the chat from Timothy Sheehy. He respectfully disagrees on everything you stated. I'm not sure if that was one point or many.
I don't think it was for me. I think that was for Stephen Keys talking about the Canadian election, which
Yeah, it's
we can
about
skip it.
Canadian elections. Yep.
Demanding if there's anything that is.
Try to avoid politics.
Yep.
I understand my background noise is noisy, so I'll try to stay on mute. But any other comments, questions?
we'll have a better topic for next week, hopefully.
Well, and what were your takeaways from Yardeni?
I thought it was interesting. Ed's basically an optimist at heart, and I think he actually believes that that they'll pull back from the brink of the excessive tariffs to get to something much more manageable that will allow us to see a light at the end of the tunnel, and get to more positive things. Not great returns in equities this year, but better returns over the next couple of years. I think he's at 7,000 for, I think he's at 10,000 for the end of 2029 on the S&P. So we'll have some bounces in the short term and move forward. I think he thinks that deals will be done. Tariffs will come down, but not come down quite as much. I'm a little less clear on how the US and China's tariffs come down, other than China saying that the tariffs are at such a level that they're a joke that they might bring them down just because it's hurting themselves. And you're seeing the president start to pull back on tariffs in certain areas. So I think that makes it a little bit more challenging, but I think Ed's of the view that cooler heads will prevail and will pull back from the brink of as bad as it felt a couple weeks ago. And I think he thinks we're in the bottoming process on equities, and that fixed income will be more range bound.
Stephen, can you talk about the positive, like if you take a very positive outcome and say, okay, how is everything that's happened positive for what? For, cross asset? How could it be a tailwind as opposed to a headwind?
Well, I think if you can dial down the uncertainty by having clarity on relations between the US and what the rules of the road are going to be, one, that will free people up to start spending again. So just having clarity on what we're operating in allows people to, consumers to start spending. It allows corporations to make better longer term plans and not pull back emergency funds that they might have been pulling in because they're worried about slowing revenue growth and what they have to do to manipulate their financials or what layoffs they might have to make and things like that. So I think when you get clarity, you can start to see a move back to normal economic activity. And if you think just back to the beginning of the year, we were not coming in to a very negative economy. We were coming into an economy that was growing at about 3 and change on the global level. In the US, it was growing over 2%. And now we're seeing a 1+% hit to that. So if you can get clarity, you'll be able to start to see investments start to move and spending get back on track. I think that gets you on a much better trajectory. And also, if you can get clarity on the rules of the road, then central banks can operate their policies effectively to counter what they need to counter. And right now, it's very hard. If I was Powell, I would not be cutting rates in this environment because of the fear that we're going to go back to an inflationary move up because of shortages. And what you're hearing from a lot of the company executives right now would have him thinking this is not the time to lower rates when the president thinks it's absolutely the best time to lower rates. So I think if you had clarity, you wouldn't have the conflicts on some of those areas, and it'd set people up to move in a much more efficient way. Think of the pullback in spending that's going on from corporate capex alone right now.
Other questions, comments?
Mark, I left off national security as one of the investment areas of need, but that is definitely one that I didn't mean to leave off. It's the area that's going to continue to attract capital, and I think is going to be critical for going forward. I do think that that Bessent right now has done a really good job of providing some stability. I think one of the keys for moving to a better place will be, do we continue to see him have a lead role with maybe some of the more anti everyone else politicians in the administration taking a back seat. I think that would help too, because I think the world needs the US to be a partner that they can count on. And I think that's being called into question right now. I did see Mark Adam raise the hand after. It's up to you.
Great presentation. I hope you can hear me. Years like this, where the U.S. dollar, U.S. leadership into question is such
Adam, I'm having trouble hearing. I think it's a dollar leadership question. And it is something. I'm sorry.
Adam, we can't hear you. Put your question in the chat, please.
I do want to touch on the dollar mark because it was an issue that was raised on our last week's call by Scott. And I think that is an area that Ed did weigh in on. And I think he believes that the dollar should rebound a little bit in the near term. And I think it's not going to be a one-way trade. I think very hard to see a replacement for the dollar coming from anywhere. Should we have a weaker dollar? It was really strong coming into the year, so weakness should not have been unexpected. But I think the fears of the dollar losing its reserve currency status are overdone. I think Ed felt the same way. Michael Hammer?
Yes, Stephen, as usual, a good presentation. What would you say to the people who are saying or promoting the sell America trade, if you will?
I'd say be careful. I think you should have a good portfolio that's diversified to different areas, but I think it's very difficult to see the US position. I actually had a slide, I don't know if I can find it now, that showed just the US presence overall. And I think you really have to be careful going too far the other way. And I also think it's a little late. I think the easy money was made in the other areas, and now they're going to face their challenges too. Particularly Europe getting their act together. I think they have some real issues to get through. And it's just hard for 28 nations with different needs to have a common ability to defend themselves, to pool their monies together in a way that's going to allow them to do that. So I don't see that that's going to be the issue that everyone thinks. So I think the dollar is going to be very hard to be replaced. I don't see where it would come from. I think it'll be slowly eroded, and I think the U.S. made a mistake in how we've handled this that has damaged the brand considerably, and it'll take a lot of time to win back the trust that has been damaged here.
Stephen, what do you think about on a very high level, if you just look at valuations, just to step back, there's great companies everywhere for multiple reasons, geography, style, sector, and so on. But just in terms of the US broad picture, if you look at a lot of the great giants, even a company like Walmart, relative to the growth, the earnings per share, whatever metric you want to take, they've become more expensive and that promise of a breakout to a new kind of paradigm or growth for that for that or other similar companies hasn't actually happened. And so that's kind of plateauing. And again, I'm just generalizing. And so arguably because parts of Europe were ignored for a long time, there are companies there that are, to use that word, radically cheaper. So yes, there's this, you know, what you just said about the departure from America because of, you know, for various reasons. But if you go beyond that and you just look at the valuations, does that concern you in any way? If I'm in fact right, you know, that valuations widespread are challenged.
I think valuations have come in a lot. I think it's hard to know. It's hard to value a company today because you can't figure out what their earnings are until you have better clarity on the trade. So I think that, but I think the valuation gap is, people make a lot out of it and they shouldn't, between the US and the rest of the world. The leading companies in Europe are mainly banks and old industrial companies and healthcare companies, right?
And Novo Nordisk, and just to interrupt,
Right.
and Novo Nordisk and Hermes, which is fashion, and LVMH, which is fashion. You know, whether you
Right.
care about it or not, but they're in the hundreds of billions market caps.
No, but I'm talking about sectors. I'm not talking about companies. When you talk about the economy itself, when you talk about the markets, I agree with your statement. There are good companies everywhere, and if you can find good companies with good earnings growth at a right valuation, buy them. I think a lot's made out of the overvaluation of the US and the undervaluation of other economies, particularly Europe. When you have to go into why is the US carry a higher multiple, it's because the makeup of the US economy is new economy stuff versus old economy stuff of Europe that sells from lower multiples, the auto industry versus tech.
Agreed.
A lot's made out of
100%.
that. So I think that's a false argument to make. I think you need proper diversification. I think you can find good companies everywhere. I just don't think you can find as many good companies everywhere as you can here in the US. And I think and the size and scale of the companies is completely different too. And can those companies, when you pick a company in one of the European nations, are they selling throughout Europe? Are they getting the full benefit of being a European company or not? In many cases, the answer is no. So I think you have to think about that differently than we're making it. Anthony, I think you've highlighted consistently on the calls the defense companies in Germany are killing it, and they should now because they're spending on them. But that doesn't mean that you want to go all in on Europe or you want to go in all on China because they're doing stimulus. I think that's the mistake that people are making now, and I think it's light research on a very complicated process.
Yeah. Rheinmetall just announced earnings. They're up 7.61% today at the close at a new all-time high of 1443.
I'm happy for any company that hits their high. I think it's great.
It's now a 63 billion market cap. It's moved, yeah. I mean, it's up for the month. Sorry.
How many years of their future earnings have they taken on though already?
It's up by 9% for the month. No, this is immediate. I mean, they're talking just about immediate orders. I haven't listened to the CEO's call, but basically they beat earning expectations with a 46% rise in first quarter sales, which is pretty high. $2.63 billion
if not
above
now,
analyst
when?
expectations.
Anthony, if they're not successful now, when will they be? I mean, this is the perfect window for them. The
Correct.
question
This
is,
is
if
their
you don't
moment,
own it
yeah.
now, what do you do? Right? And that's the problem looking at how they've performed so far. It's what are they going to do going forward? And I think you have to be careful chasing stuff in Europe after big moves right now. The same thing, I would say the same thing for the US, chasing stuff after big moves. I think you have to be really careful
agreed,
chasing.
agreed. But this this is part of the next 3-5 years of perpetual growth towards European industrialization, defense, and tech. I mean, that's my opinion.
If they can get their act together, you're right. Adam?
The EU's commitment to building the defense infrastructure. I mean, yeah, that you see. Yeah.
Adam, we're having trouble with your sound coming through.
Anyone else?
But I think, Adam, you were saying that they got to pull their act, they have to pull the money together to get the benefit of it. If they don't, then you have a lot of small businesses that don't add the full economic value to move the region forward. I think that's part of the challenge. It didn't help that much.
I think we move on.
That's fine.
Anyone else?
Is that real gold, Mark?
No. But it's really good. Anyone else? I saw that Putin declared a truce 3 days so that he could have his May Day parades. Any thoughts on that?
Usually he shoots during the truce. So
right.
Yeah, my only thought is I'm not sure. I think this is a really interesting thing though that's going on, Mark, that countries are watching, which is the president is losing his patience on the war's not ending as fast as he'd like. And I think China has seen that and is playing to test his patience by not getting sucked in. I think Russia is going to try and wait him out and hope that his lack of patience leads him to make either bad decisions or bad deals. So it's going to be something to see if that is a new strategy for foreign governments in the tariff negotiations as well, is if you can test his patience, can you get a better deal so he can say he got the deals done?
Yeah. Maria?
There. I just it's not on really on the topic, but I just wanted to share that I'm just finishing up my book regarding the human constitution, and I have just initiated a contact with a small country to implement the human contract and the human constitution regarding our human rights and our human responsibilities. So, yeah, I just wanted to share that in the team.
Sure.
Yeah,
Sure.
good to see you.
Same. Good luck. Anyone else?
I think we've exhausted them for this week, Mark.
Yeah, Stephen, Mark, I missed the presentation earlier. Did you cover shipping at its current moment in any specificity?
I did not, but it's a great.
Okay, let me give you.
I've heard some interesting stats, but yeah, go ahead, David.
Well, so a couple of geopolitical analysts that I follow kind of sounded the alarm on the actual ships that are expected to leave before May 10th tariffs. There's only a couple going to Long Beach and to Oakland. And then the one that will, supposedly the last one that will transit from China through the Panama Canal and arrive in New Jersey will be end of May. And then I tried to correlate that with a friend who's been doing logistics programming and coding for Matson for decades. He said volume's definitely down, and there are containers in the ports currently that customers are not picking up for fear of the tax implications because there's so much uncertainty. And then a lot of water cooler discussion about, you know, to the point of American leadership at the moment, if ethics are no longer important, mightn't they start just fudging dates of when things have been loaded in and moved about? But that lack of shipments headed this way and shipments being diverted elsewhere indicates that, you know, the big box stores are going to have some empty shelves midsummer. So a lot hinges on the next couple of months here.
Yep.
How does that affect China?
That's part of I think why China's going to lower tariffs on certain goods is just to help support some of their industries too. I think their view is why cut our nose off to spite our face in some of these. So I think they will be lowering tariffs on certain things just to keep stuff moving.
Yes. I think
Makes sense.
the mission is check out today. Oh no.
Mark, Leslie has a hand up.
Go for it.
Leslie.
Yes, just on the shipping front, I saw an article in the FT which showed that for what degree the China shipments to the U.S., and this is LA, were down. Vietnam was up by about the same quantum. So I'm just wondering to what degree that might be 6 of one and half a dozen of another, and that the impact isn't as great as is feared.
Yeah, I think the way the tariffs were designed, though, was to hit Vietnam too. So I think that you're right, that China was running stuff through Vietnam. Can they keep it going? I don't know. It is China stuff, as JP just put in the note. I'm not sure that I think the volume, I think you will see the ships come down pretty considerably if we don't get a resolution sooner. And I think they're gonna roll the 90 days again in June or in July is my suspicion.
Well,
So
and I
don't think
also,
enough deals.
well, from a trade finance standpoint, I mean, this is, to what degree does this become systemic as opposed to a slowdown? I guess one of the factors, I certainly don't have as good a handle on it now, but if anyone's picked up on any anecdotals.
I don't have a good handle on that.
I mean, there's the balloon. Okay, yeah, go ahead, Michael.
So everybody's talking about tariffs, but one of the things not being discussed as much is the impact of port fees on the cost of goods. So for the ultra large container ships, it can cost $5 million for a single port visit. So that's having an impact as well.
Yep. I also saw, Michael, that I believe if Europe wanted to hurt the US, almost all of the shipping insurance is done out of European companies. And JP, is that correct? That they could basically take our insurance off on ships coming here?
Yep, for the most part, that's pretty true. Yeah.
So
Or
there are
raise
ways
the
that
cost.
people can hit back.
Yeah.
Sorry, Michael.
Or raise the cost of the insurance.
Yep.
Okay.
Yeah.
Yeah. Stephen, I'll just say bottom line, no one's winning with this. So it's everybody's going to get creative for the short term. Long term, it'll eventually balance itself out. But short term, companies are already moving stuff all over the world. retag it, unpack it, repack it with new tags, and now it meets the requirements of the lower tariffs. So it's happening, and it'll hopefully end. But there'll be some level of rebalancing around the world. But again, it's all guesses at this point. There's no certainty. But the comment you did make about holiday buying, that's going to be a real thing. It's a very much real thing. So like I commented, I'm running a panel next week at Invest Midwest here in St. Louis, all on supply chain. So we got a really good group of people that are going to be on that. If y'all come to St. Louis, you can see it. It's not going to be recorded or anything, but yeah, I've got a pretty good panel with the head of the Council for Supply Chain Management Professionals. It's one of the big national or global rather supply chain industry groups. So he's a fantastic speaker. He's already been feeding me stuff for months now. We've got a supply chain guy from Accenture coming as well to talk a little bit about some different things, and then one of our law firms, supply chain law firms, Benish Law, which does all of this as well, out of Cleveland, has got some very, very good input. And then we've got one of my companies, actually is one of my LPs as well. That is the company responsible for modernizing the Port of Long Beach. So they'll be providing some insider input on some things there too. So stay tuned. We'll have some comments either next week or the week after on some developments there. But it's happening by the hour. So anybody's guess is as good as another at this point.
JP, is this should be putting additional cost burdens on smaller businesses that are pretty high, right?
Oh God, yeah. Yeah, it's going to crush a lot of things. I was looking at an article yesterday. I think it was in the Wall Street Journal, but it's a hanger manufacturer. So they literally make hangers for department stores and manufacturers and all that. It's just plastic and metal, and because they have to procure the hooks from Asia, primarily from China, the price is just doubled on that. So for a 40-cent part, it's now 80 cents. Now multiply that by millions of hangers they start putting together, and it's a small company, but that crushes margins very, very quickly in an already horrible margin business being clothing and fashion. So yeah, and that's just one piece. But yeah, everybody's going to be getting slammed or already has been hit by some of this. But again, I think with enough pain to U.S. business, a lot of this is going to balance out to the needs of our nation in some way.
Yeah.
Yeah, good job.
Okay, I've got to go. So maybe on that note, and we'll come back to these subjects. If people, again, Dubai, Thursday, if you know anybody, we have 2 o'clock to 5 o'clock at the St. Regis downtown. Any subjects you want us to talk about next week in the deep dive? Maybe it's shipping, or whatever it is, let us know. We can try to get some other speakers to come join. And if you're interested in Wednesday, tomorrow, 12 p.m. Eastern, 9 a.m., we'll talk about the West Coast tour. And these guys here's Dekai and Cam.
Hello.
And our new friend Angelo. There you
Hi.
go. So,
All right, Mike.
bye everybody. We're done.
Thanks,
Take care.
Mark.
Thank
See
you.
next week. Bye-bye.
Bye.